Welcome to the Explainer. Ready to dive into a totally record-breaking week in the US stock market? Let's go.
Every major index hit fresh highs despite some serious economic headwinds. So what actually drove all this crazy action?
The tech-heavy Nasdaq definitely led the charge, but surprisingly, the small-cap Russell 2000 wasn't far behind at all. The main catalyst for this massive rally? A literally relentless appetite for anything tied to AI infrastructure.
Case in point, Micron. They surged past a $1 trillion valuation after a massive analyst upgrade on Tuesday.
Blowout earnings from Dell, NetApp, and Snowflake really proved that the AI trade is expanding into broader infrastructure.
We also saw a crystal-clear sector rotation. Investors basically dumped defensive stocks to chase cyclical growth.
So what actually caused this rotation into small caps and home builders? Well, two massive macro shifts.
First up, WTI crude oil prices absolutely plummeted this week, dropping a staggering 11.5%.
This huge drop was largely fueled by reports of progress in U.S.-Iran ceasefire negotiations over the weekend.
Second, key Treasury yields dropped 11 basis points, which means borrowing costs just became slightly cheaper.
So cheaper oil and lower borrowing costs basically combined to create a perfect runway for those economically sensitive stocks.
But hold on, because all this market euphoria kind of masked some sobering realities buried in the economic data. With Q1 GDP slowing down and PCE inflation staying elevated, real concerns about stagflation are definitely brewing.
Amidst all these mixed signals, what's the practical takeaway for your portfolio as we head into next week?
Watch AI momentum, Treasury yields, and defensive sectors closely. This tech versus macro tug-of-war is just getting started.
I'll leave you with this to ponder. Is sticky inflation eventually going to stall out this entire AI-fueled momentum?